Hi there, Serial Trader here. Let's look over the major US indices and starting with the daily chart here on SPX. So since the last video, that potential reversal I pointed out, it has failed and we've continued to grind higher. So yeah, we got above that level at 28.51.85. So far we've got as high as 28.79.22. And this yellow line I've had up here for a while, which would invalidate the wave 4 scenario that we were potentially in from the lows there. So we've broken that, so I can get rid of this yellow line now, as we can rule out this being a 1, 2, 3, 4, looking for 5 down. So now that we've broken that 28.55 overlap level, I'm going to more confidently consider this an ABC up for an X wave. So overall W, X, and then expecting a move down here in a wave Y. Now, a few things to point out. So we have the AC equality relationship. So 5 up for A, 3 down for B, and then 5 up for this C. So AC equality is a very common relationship in a zigzag. And that comes in at 28.92.64, and we're almost there, 28.79.22. And then we also have the 61.8% retracement of this entire move down from the all-time high to the March low. That comes in a little higher still at 29.34.49. So we're still right in the area where this zigzag is likely to complete and then reverse down. But it hasn't actually happened yet. But certainly on vigilant watch for that to happen. I think we're real close. Okay, so that's really all I wanted to... Well, I guess one thing to bring up. So I expect us to get a reversal here and turn down pretty soon. Now, the question is, do we go straight, relatively straight down to make new lows in wave Y? Or I'll propose something just to keep in the back of your mind. What if this is just an ABC up for an overall wave A of a triangle? Then you come down wave B, C, D, E, right? Say we do a triangle here, contracting triangle. And let me just drop this degree down a bit. What if we do a contracting triangle and wave X is actually, this is just wave A of a contracting triangle of that larger wave X. This is possible. Now, in this case, we'd still come down in a significant way in a B wave of the triangle, but potentially, not making new lows, or even in a running triangle, perhaps a marginal new low, and then you'd bounce up in C, then you'd have D and E, and then you'd finally get the breakdown and make significant new lows after that triangle completes and thrusts down in that larger wave Y. Now, there's obviously no reason to think yet that we're going to develop into a triangle. But let's say we do turn down, but then we just can't, say we just can't make those new lows, start bouncing up again. I would start considering the possibility of this more time-consuming, choppy triangle wave X before we go down. That's possible. And then there's also the possibility that we have a ABC up for a larger A. We go down to a, potentially moderate new low, or basically double bottom in wave B, and then one more move up in a wave C for a flat, or if we do an expanded flat for that larger wave X, and then again go down to make more significant new lows in a wave Y. So it's very possible we could develop into a more complex corrective pattern off the lows here, even though we do have a nice zigzag that looks nearly complete. That might just be one part of a more complex corrective pattern. Now, no reason yet to think that that's the case, but I'm just pointing it out in case we don't get the exact kind of action that we're expecting here. So right now, I am still just, being that the only information the market has given us so far, until it develops more, is that we have a nice zigzag move off the bottom. If that is the entirety of this correction in both time and price, then it's a reasonable expectation to think that we're just going to start trending down in this larger wave Y to take out the March lows. So I just thought I'd put those scenarios out there. Basically, regardless of how it actually plays out once we start moving down here, a significant reversal to the downside should be coming up here fairly soon. Okay, so that's what I want to go through on the daily chart. Now on the hourly chart, if we examine this in a little more detail, again, here's this corrective channel that we're in, this zigzag channel. And that's again just where you connect the, the beginning of this pattern. So the origin of wave A in parallel with the termination point of wave B off of the termination point of wave A. That gives us our corrective channel for the zigzag. You can see we're still in the channel. And I think I pointed on the last video that I wanted to sell some futures short, but I want to see a break of this channel first. So we certainly touched the channel there, but then it found support, and we've continued a little higher since. So what I really do want to see is us, complete our move up, and then break the channel, have some sort of little bounce up, a smaller degree wave 2, and then make a nice clean 5 down, perhaps for that larger wave A. And that'll be good confirmation that things are truly underway. So just a proposal. I don't know how this is going to develop until it does. But potentially if we get that initial break of the channel and the first little corrective move up to a lower high, that'll be my opportunity there to sell some futures short with a stop just above the actual point where we broke down from. But again, that setup isn't there yet, but I'm certainly watching for it as far as a futures trade. As far as those SPX 2500 strike July puts, still holding those. Like I said, I'm not trying to be too perfect or precise with them. There's a reason I bought the July expirations. But I do think that they will produce some nice results once we start heading down here in a more significant way. In the meantime, very comfortable holding them. Not concerned about it. It's position size that I decided I was more than comfortable taking, so I won't waver from those. But like I said, as far as actually putting on some more aggressive short futures positions, definitely going to wait for that initial break to get that set up. Now, just examining here, so from here, it looks like we got our wave 1, 2, 3, 4. Now this wave 5 has been a little tricky, okay? But I think what we might potentially be doing here is an ending diagonal in the wave 5 of C position here. So that's where we'd have a 1 up, 2 down, 3, 4, and then 5, and I'd have to drop this degree. So that is what I'd be potentially working this final wave 5 as, is an ending diagonal. And ending diagonal, wave 1 is longer than wave 3, wave 3 is longer than wave 5, and you must have 4-1 overlap, and we have all those things. So if I just take this, you can see that this is the length of wave 1. You can see that that's longer than wave 3, so that's a check. And then if I take the length of wave 3, projected off of this proposed wave 4, you can see that so far we are still shorter in length on this 5th wave up than we were in that prior 3rd. So it's basically a kind of a rising wedge type of pattern, if you want to use a more classical technical pattern to compare it to, or kind of a rising triangle where you just have that narrowing of the range, that choppiness, and then you finally get that big reversal. So I kind of like the idea that we're in the final stages here of a ending diagonal wave 5 of C of a larger X. So that's basically what I'm working currently. And you can throw On an ending diagonal, you can throw some trend lines up. You can throw up the 2-4 trend line. And let me just make sure I dial that in on the money there. And then you have the 1-3 trend line. And then, of course, a good sign that we're starting to reverse will be breaking below this 2-4 trend line. And that would actually coincide quite well with breaking the lower line here on this overall parallel channel. So that's some things I'm watching there heading into this coming week. We could have a reversal as early as Monday. Maybe we pop up, make a slight new high. Maybe we get close to that equality relationship, or even a little further. And then we finally get a reversal down there. And also, just on this hourly chart, we continue to diverge here between price and RSI. So RSI continues to just make lower highs as price grinds to slightly higher highs. So again, that's telling you that the upside here should be quite limited and a reversal should be coming. So I just wanted to point those things out here on that hourly chart. Okay. Now we'll go to the Thinkorswim candlestick chart. And here we are on the daily candlestick chart. We have a big gap up here. So that's kind of a potential exhaustion gap. And we're also basically sitting right around this 50-day simple moving average. That could be an interesting area to provide some technical resistance. On the weekly chart, but again, we haven't actually broken down yet and gotten below this daily T line. So that's something to look for as well next week. Still in the overbought condition on the oscillator. Weekly chart, since we just finished a week. Weekly chart, just another up week, no signal there. And one thing to point out, so with bullish engulfing patterns, here we had this bullish engulfing week in March there. And after a bullish engulfing candle, a little rule of thumb, it suggests the next 3 to 5 price bars will be in the direction of the engulfing candle. So in this case, we've got 1, 2, 3 price bars that trended up in that direction. So that's just a nice little validation for that tendency to point out, but not a big deal. Just thought I'd mention it. Okay, that's really what I wanted to show here on SPX. Go to the Dow. So on the Dow Jones Industrial Average, we're actually not quite at that 50-day simple moving average, but it's pretty close. Very much the same position here as SPX. We have a 3-wave move up off the bottom. Once it terminates, we're looking for a big reversal and move down. We also have a gap up there on the Dow, potentially an exhaustion gap, so telling you that the upside is likely quite limited at this current juncture, and a downside risk is large. Okay, now Dow Weekly, I'll go through that quick here. So on the Dow Weekly, same as the S&P, basically had those 3 positive, or I wouldn't say 3 positive weeks because this week actually closed down, but 3 weeks that trended in this direction after that weekly bullish engulfing there in March. So it's almost a mirror image here of the S&P overall as far as what it implies. Okay, that's the Dow. Now I think there's something on the NASDAQ that stands out a little bit to me. Now on the daily here, the NASDAQ showing its relative strength still compared to the other 2 indices. We've actually gotten above the 50-day and the 200-day simple moving average, but we actually still have the death cross starting with the 50-day crossing below the 200-day. Now, the candlestick here we had on Friday on the NASDAQ, and let me just zoom in here a little bit more. That is a fairly classic looking hanging man candlestick, and that signals kind of the potential turning point. Being that it's in the overbought condition, we've had a very extensive move to the upside. Now we have this kind of exuberant hanging man candle. The price is likely to get rejected soon and turn back down. So just like at the bottom, it could potentially be considered a bullish hammer when you get that kind of candle, as you see here, and that certainly was a bullish candlestick. It had good upward follow through. When you have that kind of candlestick in the position where we're in now, where we're overbought, and near the upper end of a price range, that's now a bearish, potential bearish reversal candlestick called a hanging man. So that's something that caught my eye as far as potential reversal signal on the NASDAQ composite. Now on the weekly NASDAQ composite, certainly no signs of reversal there, but again, you're always going to see it turn first on that daily before anything happens on the weekly. Okay. That's really the point I wanted to make here on the NASDAQ, was that hanging man candle on Friday. Kind of a heads up saying, hey, it's time to sell pretty soon here. Okay. And on the VIX, some things to point out. So the VIX hasn't actually made any big move yet. But one thing it has done is it's started to diverge from SPX. So we made the low on VIX here on, I believe that was Tuesday. So we got Wednesday, Thursday, Friday. Yeah, so low of the VIX was on Tuesday, and that came in at 37.31. We've made a higher low on Friday at 37.63, even though the indices made higher highs. We made a higher low on VIX. So you expect a lower low in VIX as you meet higher highs on the indices. So we do have a divergence there between VIX and SPX, kind of potentially saying, hey, you know what, VIX isn't really going to go down much more, even though the market grinded up a bit more. Just a heads up that a reversal could be imminent here. Okay, that's really what I want to point out on VIX. And on the VIX VVIX tool, we do still have something to look at there. So again, VIX failed to make a lower low, made a higher low. VVIX making lower lows. So not only do we have a divergence between VIX and SPX, being that one made a higher high, but the other only made a higher low instead of a lower low. We have that divergence. We also have that divergence that I've always been looking for here between VVIX and VIX. So VVIX making lower lows. So far, VIX not making a lower low. So we have the VIX VVIX divergence. We have the VIX SPX divergence now as well. At least as it stands right now. That could be canceled on Monday or next week. But as it stands right now, we do have those divergences. So the next step to actually get a sell signal here would be VVIX popping above the red moving average and SPX popping below the blue moving average, neither of which have happened yet, but something to watch for into next week. So that's really all I wanted to point out there. And yeah, just patiently waiting for that break. Not really going to do too much until it actually kind of shows its hand. Still going to hold those SPX July puts as my core bearish position. But I'm certainly not going to add to them here. And I'm not going to sell futures yet until we actually get some downward confirmation and a little kind of reactive pattern to actually define some risk against on a futures position. But for now, just watching and waiting patiently. I do think we're very close to a downward reversal, but it just hasn't happened yet. So let's keep our eyes on the market diligently, certainly Monday and into the rest of the week. All right, Serial Trader signing off.